Hi, and welcome to this edition of the Insurance Experts. It's my pleasure to have on the line Chris Roehm. Chris is a life insurance expert, and I'm so happy to have you on the episode today.
Yeah, thank you, Mark. It's good to be here.
Okay, so first of all, how did you get into the insurance world? I know you have kind of an interesting backstory there.
Yeah, it's probably not the standard the way path that most of the people you work with have taken. I was actually sharing a cab with a friend of mine, and he was bragging on how much money he made that year. And I said, "Geez, if I ever get out of the software business, I'm going to go and do this." When the day I sold my company, I called him and said, "I sold my business. I'm thinking of getting into financial services. What should I do?" And he said, "Come to work for me. You can start on Monday." And that's literally how I got into this crazy business.
That's pretty cool. And I know you've been into it for many years now. When did you get into the industry?
Well, that was 13 years ago, 2006.
Okay, and obviously you're focusing on life insurance, and you probably discovered that you were helping a lot of people at the same time as you were making money there doing that, right?
Yeah, I sold a lot, especially early on. I sold my house, I sold my car, I sold my furniture. No, I've been focusing after I left his employment almost exclusively on planning for the entrepreneur business owner. So it's business continuity, business succession. And then I found sort of a niche that I really enjoy working with the professionals. So I become the life insurance guy for the lawyers themselves or for the CPAs themselves.
Oh, very cool. And so today, I know we wanted to talk about long-term care planning, and obviously that's a very emotional and powerful topic for many people out there. How did you kind of come across this issue of long-term care planning?
Well, of course, when you take the CFP courses and the exam, if you don't recommend that someone, plan for their long-term care, whether they buy insurance or plan for it otherwise, you fail. And so I've known all along that how important it is to an overall financial plan. And then about, I guess it's 5 years ago, my wife had some eye surgery, and I actually had to take care of her for 4 or 5 days. And I know most people would say, well, 4 or 5 days, that's nothing. Well, and she's the nicest person in the world. I'm the luckiest man in the world. I've been married to her for 34 years. And, but, she turns into this psycho and get me a Tylenol. I need a Coke. I'm freezing. Turn the fan on. And I'm like, I am not doing this in the long term. So that actually motivated me to go out and get some long-term care insurance.
Nothing motivates, nothing more powerful than having a personal experience taking care of a loved one, even I guess if it's for 3 or 4 days. I won't make light of it, but you get a glimpse into what it might be if you had to take care of someone for 3 or 5 years, right?
And I'm just telling you, if you think that, someone's going to take care of you, or you're going to take care of your spouse, or your spouse is going to take care of you, try it for a little bit. I mean, it's definitely, it's not the kind of thing that I would be good at.
Right. And I know there's a lot of people out there listening to this that are probably taking care of their parents, and they kind of understand what long-term care is about because they actually paid the bill for it, right? They paid for the home health care agency, or they paid for the assisted living or the nursing home. And so it does get quite expensive to pay for that care, again, when you're not equipped to want to be that caregiver yourself. But there are ways to make it financially viable, and that's where I know you wanted to talk about insurance today. You mentioned you'd work with a lot of business owners, and I wanted to talk to you about the business owner kind of tax incentive for getting long-term care insurance. So obviously you were talking about the IRS doesn't do this, kind of out of their goodwill. Let's talk a little bit about the IRS and why they do this.
Yeah, I think that really, if you look at all the reasons for tax deductions, tax credits, tax savings, it's always forwarding the overall goal of the United States of America. I mean, charitable deductions are because charities can provide social services that the government can't. And if you invest in a new forklift for your warehouse, that grows your business and makes you pay more taxes in the future or more money in the future. So the reason that there's ways to deduct premiums on long-term care, I think it's the same reason, is that the government knows that if all of us, as we age, and if we become a burden on the government, it's going to be better to give us a tax deduction today and let us buy some private insurance than rely on Social Security, Medicare, Medicaid, down the road.
Exactly. And Medicare only covers it for like 20 days. So it's not designed for long-term care. Even on your Social Security form, it says like you may want to consider private insurance because they're really encouraging you because you might end up on Medicaid. And the way that happens, most people on Medicaid, they impoverish themselves. They weren't necessarily poor to begin with, but they became poor by paying for care. And then the government has to pay for it. So like you said, if you buy a private insurance policy, you're actually staying off of Medicaid, so the government's not going to pay for it at the end.
To qualify for Medicaid long-term care, I think you can only have like $2,000 of qualified assets. Is that right?
That's correct. Although if you're currently in crisis, taking care of your parents and they're in a nursing home, there are Medicaid planning attorneys that can help rearrange your assets, rearrange your estate in legal ways so that you can gift the money to kids and then you qualify, like you said, for the $2,000 threshold.
Right. But I think there's a 5-year look back, and in Florida, you got to do that 5 years ahead of time.
Yeah, there's different look backs, there's different rules around that. But let's kind of talk about the business owner tax incentive, because I'm sure the people out there want to hear about this. So you can do this with both traditional plans, and you can also do it with hybrid policies, so life insurance, long-term care policies. And effectively, you can take up either a portion or all of the premium as a tax deduction, business expense, through your business, which is worth a lot of money if you're paying taxes, and the benefits are still tax-free. So I know you have some clients you've talked to about this, and you've done some hybrid long-term care planning. Where do you think the opportunity is for your clients out there?
Well, I think the opportunity is when I meet a client that has like an older cash value policy, we can redeploy that cash that they're never going to use. They're not going to take it out. They may have bought the policy to pay for a kid's college or something. Let the cash build up for one reason. But if we can swap that policy today for an equal or greater death benefit and include a long-term care rider, I think everybody I show that to is very keen on that.
Yeah, so it's interesting. There are some situations where it almost feels like it's too good to be true because you're just redeploying money that you have allocated elsewhere in a better way. You're just getting more value on your death benefit, more long-term care coverage instead.
I was explaining, I would say, Mark, there's no free lunch. So why are we doing this? So you're giving up access to this cash. I did one earlier this year. There's about $230,000 of cash value in the policy. So in exchange for you giving up access to this cash, we'll give you, the same death benefit and we'll include a long-term care rider. And then they kind of understand it. It's no free lunch.
Right. And there's always trade-offs, but again, because you're working with insurance experts, life insurance experts, I'm a long-term care expert. We're also partnering with other long-term care experts in our network to help your clients. We're going to find the exact right solution that fits you, and we're going to shop the market for a multitude of carriers to do that.
And that's why I'm coming to you, Mark, for this help and this partnership. Is that one of the really good things is that there's one thing my clients hate is paying insurance premiums, but luckily they hate paying taxes more.
Right, exactly. Okay, well, I'm going to have you on future episodes. Thanks again for being on our show today, and we look forward to talking to you in the future.
Thank you very much.